All right, it is Thursday, June 13th, and as we do every day, we want to zoom out to the monthly chart so we can help maintain some perspective. And as we can see here on the monthly, we are getting that breakout from that 3-month balance. Yesterday's close, 54.27 half. So a pretty decent distance from the previous month's high, which was 53.58. And that's going to be kind of a key level. If we were to get a pullback to pay attention to, that would be really close to the gap fill, would be the gap fill actually. So, that would kind of bring us back into a possible retest of this monthly balance. And something that we've been talking about, right, is remember that a monthly breakout can take a while to become evident, and it can move back and forth, right? The month has a lot of days and a lot of trading days in it. So when we're looking at our monthly thesis, we're trying to develop our longer time frame analysis, we have to remember that it can change day to day, right? Like yesterday, today looks a lot better than yesterday as far as the breakout goes, but that can easily change as one day really changed what the breakout looks like. So a larger day can really give a different perspective. So you always want to maintain perspective and remember that this isn't going to close for another, it's about we're about halfway through the month. So still got a decent amount of time. Beyond that, really the most important level, you see we're getting this +4 here. The most important level is going to be that prior month's close, and that's that 52.95 half. Right below that level, we start to not be a +4, and then you kind of assume that some momentum traders might be stuck off sides, and the odds of liquidation start to increase. Switching over to the weekly, I can see the weekly we are getting a +4 as well. And on the upside, breakout from last week's high, that 53.85 half, right? That would actually be a gap fill. There's a gap there on the daily. We'll see it when we switch to the daily. The weekly is one time framing higher, so we're actually getting a little bit of a signal here, right? We got that cessation of one time framing, 3-week balance, and now we're getting a breakout from balance. So we're breaking out from balance on the monthly, breaking out from balance on the weekly. So, you know, just something to pay attention to. You can see a nice little trend here if we were to, pull out our magic pen tool, right? You can see, not a super straight line, but you can really see the trend starting to form there. Switching over to the daily, here we can see that day yesterday, right? We gapped up and for the most part didn't do much. We traded about a 38-point range, so a decent sized range. But for the most part, after the initial move up in a period, the market really just kind of traded sideways and then took out stops on both sides and finished fairly close to the middle, finishing below the close or finishing below the open marginally, but still above this balance. And you can see, real large balance here. And you could really just kind of group this as one. Something we talked about, right? When you kind of have these overlapping balances, you've got to be careful of weakness, and that's why we had our levels to make sure if we did get below, then that would be the sign of weakness. We never really got below any of those levels, and now we're getting this breakout here. So something we want to be paying attention to today is definitely going to be this gap. Is this gap going to be tested? That's really the kind of the key going into today. And then the title of the video is how to trade a one-day balance. And that's going to become key, even though we're at all-time highs, right? And I think that does put a lot of, you know, mental thoughts into people's heads where they're almost coming into the day. It's like people are coming into the day instead of maintaining perspective that yesterday was just a balanced day, that they're thinking one of two things. One, this thing's going to keep going. It's raging. Just grab by the horns and hold on. Or two, this thing's overdone. There's no way it's going to keep going, and it's gotta come down, right? And the whole point of doing this every day and helping maintain that perspective is so we don't get short-sighted like that, and we can really kind of pay attention to what's going on right in front of us, especially for those of us that are intraday trading, right? If you're swing trading or if you are like longer term trading, maybe weekly, monthly, it's going to be a little bit different for you. The daily movements are not going to be as important. Mostly, you're going to be paying attention to where the market closes at because that's a sign. But for us intraday, we want to maintain this perspective, right? We've got the monthly going up, we've got the weekly going up, the dailies also in a balanced breakout. So we do have that kind of bullish tint or that tilt to the upside, but also what happened yesterday is still important. And yesterday, the market just for the most part balanced. And now let's switch over to the profiles. We can really kind of see that here. And when we're taking a look at the profile, do a little review from yesterday. Oh, I deleted all this. Whoops. Let's see if it brings it back. There it is. So when we're doing this little bit of review, let's go ahead and get this in here. From yesterday, basically, like I said, you got this open lower. We traded higher. B period basically marked the high. C period opened, then started trading down. Real narrow range before J period decided to take out both sides of liquidity. We got this kind of weak high, which is a sign of weak buyers. So that's definitely a level that we're going to have to be paying attention to. And you can see that's kind of where we have that transition zone up here at the high. That's because I think, if the market's unable to move up and hold that, then there's opportunity to just kind of fade back into the middle. As yesterday, right, was a balanced day with excess on the low and kind of a weak high. I mean, there's excess on the high technically, but not really. I'd like to see a little bit more excess, not really great excess, but excess nonetheless. And so what that does is lets us know. Let me go ahead and move this back to where the right spot is, which is here. It lets us know kind of how we're looking to play today, right? We're looking to play today in a balance, right? So I'm kind of looking for the market to come down towards the settle. Remember, it was a +4 day also. So with that, I'm just going to clip this real quick so we can just get it out of the way. With that being said, we want to pay attention that we balanced yesterday. So a move lower doesn't necessarily mean that the market's going to fill the gap, right? The key will be to pay attention to the tempo. Is the market coming down with some velocity? Is it coming down with some speed, some tempo? Then there might maybe some opportunity to look for that short. And in reality, that short that we're looking for is going to have to come below this 24, right? You see that kind of mechanical low that got left behind at the end of the day. So we're looking for it to fade under there and then get below that previous day's low and stay below there. And then you just kind of trail it down as the market looks to fill that gap. If it is unable to fill the gap where you start to see tempo slow and then all of a sudden we start to make higher highs, right? If you switch to a different time frame, you start to see those higher highs or you start to see the internal start to maybe start switching directions, well, then you can exit that short. If you're looking really to fill that gap, you can be a little bit more generous, holding at that prior day's low, maybe take some profit and then try to catch that runner to fill that gap, right? They say 80% of gaps fill or 100% of gaps fill eventually, but eventually is the key word in that statement. It's not the next day or the week after or the month after, it's just eventually. So, and even that I'd like to argue with because if you go back, I feel like there's gaps that didn't fill since COVID. So there's some gaps below. So if they are going to fill, it's going to take one hell of a little smackarooski to the downside. Now, to the upside, right? You can't be too ambitious either. We are at all-time highs. We saw a little bit of weakness from buyers yesterday after getting some excess, so maybe indicating a possible seller came in the market. And then this morning, when we got the news, it did look like there was some stuck buyers up here from this 52 to 50 area. So that's why I really want to see them pop above and hold that. Failure to hold that really is just a kind of sign of weakness. But remember, it's just temporary weakness. It's not, oh, because they didn't get above here, now we're going to go down into the gap. We're going to rotate back into balance, right? This thing is balance, up, down, back to the middle, right? So we balanced yesterday, and you want to keep continuing to play that balance today. And that's the great thing about balance is it works on pretty much all time frames, and it can be as long, like we just saw we had, that 10-day balance before another 7-day balance and then a breakout, or it can be a 1-day balance and then a breakout from the 1-day balance. That's why I pay attention to developing value. Where is value developing? If we move up here and just start to kind of sit, right, and we start to maybe balance up here, well, value is building higher, then we should probably be trying to get long on these pullbacks, looking to trade higher. Same thing on the downside. Let's say we do get that breakout, but it's not strong and it starts to kind of roll back, but isn't getting back above that settle. Well, then we can look to fade back towards that low where we know there could be possible liquidation from, and look to play that balance from the short side on these pullbacks. But that is pretty much it. Remember, we're at all-time highs. We want to be a little bit patient. We're opening inside the prior day's range, so good odds that the market may be a little bit slow here. It's Thursday. We got all the news we were looking for yesterday. Who knows how crazy it will be today. We've got some speakers on today. We've got Treasury Secretary Yellen today, and then we've got Fed Williams. And then 1 o'clock, I think probably the most important thing today is at 1 p.m., the 30-year bond auction. Right, we had a decent bond auction on Monday that moved the market, gave a little bit of volatility. So, I think possibly catch some people sleeping. They're not paying attention to the news, thinking that news only happens at 9:30 and 8:30 Eastern. And, maybe a little sleep at the wheel, get some people off sides around that one, look for that reversal. Yeah, other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. And I'll see you guys tomorrow.